Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Monday, October 22nd through Friday, October 26th, 2012. We will be looking at the week overall from last period into this current coming week, analyzing where this market will be going on a PPT methodology scale. Now, the PPT methodology stands for Price, Pattern, and Time. It is proprietary, developed here at InTheMoneyStocks.com. It is the most key and accurate analysis in the entire world, folks, bar none. You read the PPT correctly, you have an 80 to 90% success rate. So let's get started here. Let's see exactly what's going on. This is an intraday chart on the 10-minute side of the SPY, which mirrors the S&P 500. So you're basically looking at the S&P 500 here on an intraday 10-minute scale. This is Friday, this is Thursday, this is Wednesday, and we can go back even further. I think the biggest thing that jumps out to me on a basis of intraday and even on the daily chart, because these lines are apparent on the daily, are these green lines, and I have them in different colors than the other ones to quickly show you guys how important they are. So the high and the lows, if you connect where we've been going recently, look at this. All right, so especially the one on the bottom. Take the pivot low going back to June 4th. Connect it to the low from the July 24th, and it connects right to the low here on October 12th. And then on Friday, this is a big deal, folks. On Friday, when the markets got massacred, S&P down 24, NASDAQ down 67, Dow down 205, we actually closed a shade below that line. Now again, I'm not ready to throw in the towel yet to say the markets have officially broken, because again, it's so close. You know, if you were to go to the daily chart and I just adjusted this line a couple pennies at one area, it would basically be in that range. So what I want to see on Monday's action, which will be very telling, is do we close below it again? Essentially confirmation for those of you that are members, which is a proprietary technique here at InTheMoneyStocks.com. Do we confirm below this level? If we confirm below this level, the market is going to head to 141 to 140. All right, that is actually, believe it or not, as low as I think it's going. I know you might say, well, that's not that much further. The spiders closed here at 143.39, so you're really only talking about $2.40 to $3.40 drop, and that's true. I don't believe before the elections you're going to get a massive collapse in the market. Now, afterwards, with the fiscal cliff, that is definitely possible. But beforehand, it's suspect. And let's just go to the daily chart here to take a quick look. And you can see, again, the blue line is the one that, and you can see basically it closed on it on the daily chart. So this is what we're really watching again. And this is the daily chart of the SPY, which again is basically the S&P 500. You can see very clearly connecting these lows. That's where we have it right now. We're essentially on it. We closed a shade below the 50, but without confirmation, that doesn't mean anything anyways. And again, Monday will be a very telltale day. If you break through this level on Monday and confirm, this is where you're going. All right, very quickly, you're going to head right to 141.85 gap window. Well, 141.75, we'll call it, gap window right here. If you take that out, you're going right to gap fill, which is at 140.90. All right, and if you take out 140.90, then you're going to go down to the 140 level, right down here, folks, right in this vicinity, in that range. Now, there's a small chance we could break through and hit the 200, which is at 137.50, but honestly, I think that is a remote chance ahead of the elections. After the elections, I think it's very possible. Ahead of the elections, I find it a little bit more doubtful. But again, you always want to look at all possibilities as traders. All right, and again, so we're basically saying here that Monday's the break or make day. You're either going to see a break here, in which case you're going down to this area down here, all the way as low as possibly 140. If you don't break on Monday, I think you're going to float back up and go sideways and choppy into the elections. So again, folks, I repeat, Monday to me is a very important day. Very important. All right, now again, you can see the level on the upside, which was a beautiful one. Just connect these high pivots right here, and you have a beautiful trend line. And believe it or not, folks, on Thursday, I gave the shorting signal to my members. All right, if you're an In The Money Stocks member and you are a Research Center member, which is geared towards swing traders, or an Intraday Stock Chat member geared towards day traders, you got the signal to go short before Friday's debacle. All right, now how much is that? I mean, how much is that worth to you? All right, we only charge $49.99 for the Research Center, and you could have probably made about $5,000 pretty easily, even on a small account with the dump on Friday. All right, for me, I shorted the Qs, the QQQ. because the QQQ was just the same as the spiders, and I thought you could get a better bang for your buck out, and I was 100% right, because the NASDAQ was down 2.2%, while the Dow S&P were only down about 1.5% on Friday. The reason why you loved the Qs here last week, and this is again where I made a lot of my money last week, was because you had a head and shoulder former retrace trend line right here. Connect the low pivots right there, you went right up, so right into Thursday, all right, right here, Wednesday, Thursday, necktie, 2 moving averages of resistance, and you pierced this retrace trend line. See how you broke, confirm below, which is important. You get your retrace, that's a shorting level right there. All right, so again, assuming you were with us, you got the signals that we could be headed lower even before the market actually started to sell off. And that's what it's all about, folks. I mean, let's call a spade here. You want to be on the front end of the curve. You don't want to be chasing the market. Chasers lose. I mean, it's just that simple. Chasers go broke. You need to know the move is coming ahead of time. The PPT methodology, which we teach you here, gives you that. I don't care if you have a 401k, an IRA, a trading account, an investment account, whatever it is, you need to know these signals beforehand. You can exponentially increase your returns, anywhere between, in my opinion, 25 to 100% returns on swing trading if you do swing trading correctly based on PPT methodology. Day trading is much, much more than that if you do it well, but day trading is tougher because you got to be there intraday analyzing the markets. You can't work a 9 to 5 for day trading. Swing trading, yes, you can. All right. In any case, one thing to watch on the Qs, guys, which we could hit on Monday, is this level right here. And I'm telling you right now, I will most likely, I'm not going to give you 100% because you're not a member if you're watching this video necessarily. Members will know. But there's a decent chance that I will be a buyer at the 200 MA if we flush there on Monday. Okay? That will be a short-term support. In addition, what's beautiful about it is take a look at Apple. If Apple flushes to the 200 here, you got to be a buyer there too. Got to be a buyer. Now, Apple has earnings next Thursday, so you got to be aware of that. It's a little scary. But either way, I mean, that's a sweet little area. Sweet little area. Taking a look at Google, guys. Google got hammered again. This was a beautiful downward move on earnings. Obviously, they had that pseudo early release on Thursday, which crushed it. And then Friday, we saw downside. 200 MA would be a buy on Google anyways for a bounce. And again, this type of action is awesome for swing trading. To be honest, it was a slow swing trading market for the last couple months because you were just chopping in the upper ranges. Market would sell off 2%, then rise 3%, then sell off 2%, rise 2%, or 1%, then sell off. It's kind of very choppy upward move. And you can see it on the Qs here. I mean, look at the Qs. Floating up, down a little bit, floating up, down a little bit, floating up. So it was a very tight range. Now you're getting the volatility, or that's the Google chart. But either way, I mean, you can see it here on the Qs. Went up, down, and this is a very tight range up here as you're making the head and shoulders. Now you're getting the bigger moves. This is what you want to see, folks. This is awesome. And what I love is that I called it 100%. Fed comes out QE3 Unlimited. They blew all their last bullets. They shot them. Because once you do QE3 Unlimited, Unlimited being the key word there, there's not much else you can do. I mean, that's the crazy thing about it, is that I said it when it happened. I said, guys, the Fed was stupid here. The Federal Reserve was stupid. They should not have said Unlimited. They should have said just QE3. Because then everyone would have been saying, oh, well, they can do QE4 and QE5 and QE6. And it would have had that carrot out in front of the market constantly. Once you say unlimited, well, what else can they do? I mean, it's unlimited already. Everyone knows that. It's in. So again, this is something I told our members. I probably even said it in these type of free videos back then. That was it, folks. That's when the market was going to make a top. You got another beautiful rounded top, which is the same as March, April of 2012. See this rounded kind of top where you kind of chopped around. This is basically the triangular pattern too, but chopped around, now you're trying to break down. Again, I don't necessarily know if we're going to be in breakdown mode yet, because again, before the elections, I'm doubtful of that. But I do think that you will have some wild moves now, and for swing trading purposes, this is awesome. This is where you want to be. By the way, I'm releasing a hidden gem on Monday, folks. Hidden gems have a record of really between 50 and a 1,000% return. They're a little bit of a longer-term small cap that I release. And again, these things work out based on my analysis like I think they will. They are monstrous. And if you're a Research Center member, you will get that on Monday. All right, that report will be coming out. So we have a lot of stuff going on, guys. A lot of stuff. Swing trading getting more active. I'm going to be ready to buy and short some stuff on Monday. Swing trades. Going to get those alerts out to you guys Sunday night. Also, hidden gem on Monday. Next small cap king. Beautiful mover coming up, in my opinion. That's going to be awesome as well. Again, continuing within 2 weeks, I'm going to be doing a confirmation river theory and three-tail theory webinar, seminar online. And again, we're going to be giving you guys that more proprietary information so you guys can make more money in the market. This is an exciting time as we enter the last quarter of 2012 here. And again, heading into the end of the year, the money is there to be made. Let's make it. Come join us here. Take the 7-day free trial. 7-day free trial to the Research Center if you're a swing trader or investor. And if you're a day trader, you can always take the intraday stock chat and come and I'll give you live trades in the intraday stock chat throughout the day on Monday and the rest of the week next week. Let's keep rocking it. Take care, folks. Again, come join us here at InTheMoneyStocks.com.